$5 trillion sits inside the world's hedge funds. Enough private capital to bend currencies and outvote governments without ever holding an election. Right now, it is 1 in the morning, and you are a nobody with a spreadsheet and an idea about a stock. You think the job is to be right about the market. It is to be trusted with other people's money. And far above you, someone already decides whoever gets that trust. This is every level of a hedge fund manager, from controlling nothing to deciding who gets a trade at all. You start as a junior analyst, and you control nothing. Not $1 is yours to move. You cover a slice of the market, a few companies you will know better than the people who run them. Your job is to find an edge, a fact the price has not noticed yet. They pay you $250,000 to have ideas and nothing to act on them. So you live inside the model. Every filing, every transcript, every footnote nobody else finishes. You build a spreadsheet so detailed it predicts a company's quarter before the company does. You're not paid to be busy. You are paid to be right when everyone else is wrong, and to prove it cold. You learn that information is the only real product here. Channel checks, supplier calls, satellite images of parking lots. A mosaic of small, legal facts assembled into a conviction nobody else has yet. There is a line, material and non-public, and they teach you exactly where it is, so you can walk as close as the law allows and never step over. Mostly. Then you pitch. 90 seconds in front of the portfolio manager to defend a stock with your name on it. Right? And the fund makes money and you exist. Wrong. And you're a line item to be cut. You round your conviction up just slightly because certainty is what gets capital. This is the drug, and you'll chase it up 8 levels and slowly stop feeling it. You are right often enough that they start sizing your ideas. The PM puts $50 million behind a conviction you defended at a morning meeting. Now a sleeve of the book carries your fingerprints, marked to market every single day. Your pay doubles towards 7 figures. Your sleep does the opposite. You have tasted real capital, and you want a book of your own. The morning meeting becomes a coliseum. You pitch. The PM and the other analysts try to take your idea apart in real time. Every assumption gets hit. Every hole gets found. You learn to defend a thesis like a lawyer defends a client, not by being honest about your doubts, but by being unbeatable on the facts you choose to show. Then comes the first gray morning. A number in your model is softer than your pitch admitted, and you know it. You could flag it and watch the position get cut, or let the strong version stand and hope the quarter saves you. You stay quiet. The trade works, nobody asks, and you learn the quiet lesson of the industry. Conviction pays, and doubt is something you keep to yourself. They give you a book, $300 million of the firm's capital, yours to deploy on your judgment alone, and a contract. You keep roughly 15% of every dollar of profit and 0 if you lose. You are no longer paid to have ideas. You're paid for outcomes in cash, settled monthly. The book is the most powerful thing you have ever held, and a leash with a number on the end. Now the wall of screens is your nervous system. Green is oxygen. Red is a hand to your throat. You stop being a person with a job and become a single number, your P&L. That resets to 0 every January. You are your last trade. The market does not know your name and does not care how hard you worked. It only pays the ones who are right. You learn about the risk limit, the invisible wall the platform draws around your book. Lose a set percentage and you are cut down automatically. Positions liquidated, no appeal, no conversation. Half the managers on this floor will be gone within 2 years, stopped out, and walked to the elevator. You finally understand the deal. The upside is yours. The survival is theirs. Then it happens to you. A position you were sure of moves the wrong way for 9 straight sessions. $22 million in paper profit evaporates, and the risk desk circles your name. You cut at the bottom, the way the limit forces you to, and watch it recover the week after you sell. Something closes shut inside you, the part that used to trade on hope. You will not miss it. You survive the thing that kills most of them, and survival compounds. Your book grows past $1 billion. You are a franchise now, a name the platform protects, poaches for, and prices like an asset. In a strong year, your slice clears $15 million, and the firm pays it gladly because you make them 5 times that. You do not feel rich. You feel rented at a very high rate. You build a team, analysts who pitch to you now the way you once pitched up. You hand them the same coliseum, the same lesson. Be certain or be cut. When a rival fund tries to hire you, your platform doubles your guarantee overnight. You learn what you are to them. Not an employee, not a partner, but a revenue stream they cannot afford to lose. The money outruns your ability to spend it. The apartment, the car with no purpose, the first-class seat you no longer notice. And a stranger feeling arrives. The losses stop hurting. A bad week that once meant no sleep is now a shrug and a fresh position. The capital has made you efficient, calm where you used to be human. You can barely remember what that analyst was so excited about. So you do what every star does. You leave to keep all of it. You launch your own fund, and over 100 quiet dinners you raise $1.5 billion from people who knew your number before your face. Then you set your terms, 2 and 20. 2% of all the money every year just for holding it, 20% of every gain. You no longer trade for a cut. You own the machine that takes it. You sign the documents that turn a trader into an institution. A lockup, so investors cannot leave when they are afraid. A high watermark, so you only earn the 20% on genuinely new profit. And a management fee, the 2%, that lands whether the year is a triumph or a disaster. It is the most beautiful clause you have ever read. You get paid to hold the money, and the performance is almost a bonus. But the money is different now, and you feel it at 3 in the morning. This is a teacher's pension. This is a university's endowment. This is a family that trusts a name. Lose the firm's money, and you are fired. Lose theirs, and you are a story they tell at the dinner table for a generation. The screens look the same. The weight behind them does not. Then comes a flat year, and you learn what your terms really mean. The fund returns almost nothing. Your investors make almost nothing, and you collect $30 million in management fees, on time, in full. You tell yourself it pays the team and keeps the lights on. It does. That is the problem. The structure pays you most reliably for the one thing you no longer have to do, be right. The fund crosses $15 billion and quietly stops being about the trades at all. 2% of $15 billion is $300 million a year, yours before a single position moves. Pensions and sovereign funds are your investors now, and they do not want excitement. They want a smooth line and a return call. You walk in atrium with your name on the wall and realize you have not placed a trade in months. Your days are board meetings, allocator dinners, and a risk dashboard you read like a weather report. You hire the hungry version of yourself by the dozen and let them carry the fire you used to carry. The fund is a business now, and the business is gathering assets because fees scale with size and brilliance does not. Past a certain point, you are not paid to win. You are paid to be large. Then a strategy breaks. A crowded trade unwinds, and in a week you give back a year. The investors panic and demand their money back at once. So you pull the lever in the fine print. You gate them. You suspend redemptions, and their capital is frozen legally in your fund on your terms. They scream. The lawyers earn their year. The money stays. You did nothing wrong. You simply found which side of the contract you were on. Past $50 billion, you are no longer in the market. You are a force inside it. When your fund takes a position, the price moves before the order is even filled because the world is watching what you do. You stop thinking in stocks and start thinking in countries. Interest rates, currencies, the decisions of central banks. A man once made $1 billion in days betting one government could not defend its currency. That man is now your floor, not your ceiling. A macro position you built over months comes in, and one screen ticks up $380 million in a single week. Years ago, that number would have stopped your heart. Now you read it, nod once, and ask what is next. Across the city, a smaller fund took the other side of you and is being walked to the elevator tonight. You do not celebrate, and you do not mourn. You are simply the strong hand. Finance ministers take your call now. A central banker wants to know, quietly, what you are seeing before they decide. You move between worlds the way money moves downhill: the fund, the policy dinner, the think tank you fund, the regulator you advise. You do not break laws. You help write the rooms where the laws are discussed. The line between trading the world and steering it has quietly disappeared. You are a billionaire, and almost no one outside this industry knows your name. That is the point. That is the prize. You have everything the one-in-the-morning version of you would have traded his soul for, and on the quiet nights you notice he did. You cannot remember the last idea that excited you, only the last number that confirmed you. You climbed to the top of the market and found something still above you. There is a level above the managers, and it does not trade at all. It allocates. The pensions, the sovereign wealth funds, the endowments, the $5 trillion itself, and the people who decide where it goes. They never build a position or stare at a screen at midnight. They choose which managers get to exist. Every titan on the floor below is downstream of a committee that can grant their billions or take them away in an afternoon. You make it into that room, a seat on the committee that deploys a nation's retirement money. Managers who move markets fly across the world to pitch you, and you watch them do the thing you once did: round their conviction up just slightly for capital. You allocate or decline between courses the way someone once decided your fate in 90 seconds. You are not smarter than the titans below you. You are simply earlier in the river. In front of you is a database of every fund alive, track records, drawdowns, the careful stories each one tells. 9 and 10 will be closed within a few years, stopped out or starved of capital, and you already know which. You move money toward the survivors and away from the rest, and your decision is the difference between an empire and an elevator ride. You do not pick stocks. You do not pick trades. You pick the people who are allowed to. The edge you hunted at 14-hour desks. The first book that felt like a leash. The screens that were your nervous system. None of it was lost on the way up. It was traded knowingly, one level at a time, for distance from the risk and nearness to the money. You ended up as far from a single honest trade as a person in finance can stand, and more powerful than any trader alive. Somewhere far below, it is 1 a.m, and a young analyst opens a laptop in a dark apartment. She has found a number the market has not noticed, and she cannot stop seeing it. She thinks the job is to be right. She does not know yet that being right is only the toll, that the real climb is toward the people who never trade, who simply decide who is allowed to. They are already watching her. The money never works. It just finds the next person who will.